as we go back to SPY, let's go ahead and take a look at a couple tickers and maybe pick a couple to do some automations. At Trading Made Simple, we our niche is really automation, really teaching you how to use your own platform, Thinkorswim or IBKR, to automate your trades. This is really helpful because we like to put on our trades Sunday night and let them just write out for the week. We have our stop loss, our take profits, our trigger levels to get in. And so everything is set up in the beginning. And you know what we also do, by the way, for these types of conditions? Regardless of what the bias is or the market breadth at the start of the week, we always do calls and puts for our tickers because we want to make sure that if we're going to lose out on this type of momentum when we're in a call position, that put trigger is there. And so we have calls and we have puts for our stocks that we pick on Sunday, and then that protects us for these types of situations where, hey, market breadth was doing pretty decent, kind of flatlined, and then all of a sudden we lost momentum, and then we gained momentum to the downside on puts, and we have a put waiting in the wings, just ready to rock and roll. So very important. All right, let's take a look at some stocks where I actually see a lot of option flow in. And I like to look at option flow because really, even as an automated trader, most retail traders are trend traders, right? We're going with the trend. Who creates the trend? The institutions. So knowing that could really help you kind of identify, hey, where is the institutions kind of putting some money as the market's going down? So we actually have money going into DDOG, which is really interesting because they're actually going in for calls. Now, they have a timeline of 220 of 26, okay? So plenty of time in the future. But as retail traders, we don't want to be in a trade and start losing money automatically when we get in. So knowing that this is a call trade, I would really like to see that VIX, right, go a little lower. So could you time this out? Absolutely. They're looking at the 240 calls. Wow. So they're not only looking for a move to break above the resistance level that we have on our chart right now, but they are looking for a big pump for February's expiration. What could we do as an automator looking at DDOG, knowing that the target is at 240, but the breadth of the market is real negative. It's not very good for calls in this situation. Well, what you could do is actually look at where resistance is. You could see our pre-market high for a DDOG was at 194. Let's take a look at that on a shorter time frame. On an hourly, yes, you can see that the pre-market high here was at 194.92. I would just round it up and pad it to 195. You could say, hey, look, if we break above, let's say 195 or 195.50, then I'm going to feel more confident that we might have a leg up, that maybe the trend has changed. So with that, you can already assess the chart right now and then create an order for that. How would we do that? Let's go ahead and dive in. So what I'm going to do here is go to the trade tab of DDOG. And then let's do, now you have to give yourself some time, right? Because you're like really wondering, is the trend going to change within a couple weeks? And if it does, how far will I move? So here we could take a look at price. We could also take a look at debit spreads as an example if the calls are too expensive. So let's take a couple weeks out and take a look at a call. So they're looking actually to a 240 call, which is really out of the money. It's only 46, but there's not a lot of volume or open interest in it. I would stay away. As we take a look at the trade tab for the calls, because that's what the institutions were buying, I'm actually looking for where is most of the volume. And you can see that there's a lot of open interest here at the 200 level. Okay. So at the 200 level, it's $1.42. That's not bad. So what I could do is do a buy custom with an OCO bracket. Let's go to buy custom with an OCO bracket. This allows you then to already have your buy to open and your two cells to close. Why do we have two cells to close? Well, we have one as a profit target, we have one as a stop loss. So we have all of our rules set up in the beginning of the trade. So that allows us to set it and forget it. And you know how I love that. So if you can take the human emotion out of trading, they've done studies on this, you can actually do better than actually sitting in front of the computer and manually trading. So I want you to take a look at that. So how do we do that on Thinkorswim? So as we look at the buy to open here, you could see that there's a little wheel cog here. If you click on it, it will then give you the order form. Now, this order form is really important because we opened it up, right? So sometimes you can do whatever you need to do right on the front of the screen, but because we opened it up, we're really looking at the conditions, okay? So on the conditions, all you have to do is click underneath the symbol and a whole bunch of items will just automatically list as default, and that's fine. So go ahead and just start clicking DDOG. Method, it defaults to mark. Then you have a trigger, equal to or below, or equal to or above. The first one is below. If you get caught up and you're not used to these symbols or these triggers, you could just scroll up and you'll see that there's actual writing for what you're programming. So you can always just look down here and it says less than or equal to. We're talking about calls, right? So we need it greater than. So we said about 195. We can actually pad that even a little more and say 195.50. And so now we're basically telling Thinkorswim, I want to get into this long call when the stock price gets to 195.50.